Justin, we got more good news on the inflation front. The July CPI inflation reading came in at an increase of 2.9% year over year on the headline number, which is less than estimated. And then core CPI, which is CPI minus volatile food and energy, came in at 3.2% year over year. And then both month over month for headline and core came in at 0.2% increase as expected. The fact that the headline number came in at 2.9% is going to help the markets, in my opinion. I think the markets should do well today. I think that's good news. It increases the chances of a Federal Reserve rate cut. I think right now the odds of a 25 or 50 basis point cut are about even. This might actually cement a little closer to 50. I personally think that the Fed should do 25. But either way, this is good news. The fact that the headline numbers in finally with the two handle is huge. Yesterday we had better than expected producer price index inflation, which is the prices that businesses face, and that went down. That was slightly lower than expected. Obviously, prices are still high, but the rate of increase going down is helpful for the future and increasing the chances that we'll get those rate cuts soon, because now the Fed is looking more at their labor market side of the mandate to make sure that the labor market isn't deteriorating too quickly. So I think the Fed is actually focusing a little bit more on that part of the dual mandate for the first time in a very long time. So this is some good news. We don't want to see necessarily inflation falling off a cliff, because that would mean that that the growth is starting to stall pretty substantially. The fact that inflation, especially on the year-over-year headline number, is lower than estimated, but not substantially lower than estimated, is that Goldilocks zone that I think is perfect for the market and perfect for the Fed. Let's see how the market trades up today. I think the market will do pretty well. We are a little bit closer to the top of this trading range, but I think this optimism from this report will give us some more momentum. Maybe next week we might see a little bit of consolidation down trading sideways ahead of Jerome Powell's Jackson Hole speech. But until then, I think this is really good news, and let's take this in stride for now.